You have never once seen the word tariff printed on a grocery receipt, a car invoice, or a checkout screen at a big box store. And yet, according to trade economists tracking the numbers, the average American household is quietly paying somewhere around $1,300 a year because of tariffs, money that never shows up as a line item anywhere, no box to check, no tax rate listed. It's just baked into the price before you ever see it. Let's start with the reframe, because this is the whole video in one sentence. A tariff is a tax that gets collected at the border, but it gets paid at the cash register. The importer writes the check to the government. You write the check to the importer, plus a markup, plus the retailer's markup on top of that markup. By the time the cost reaches your hands, it's wearing a disguise. It looks like inflation. It looks like prices just went up. It looks like nothing at all, because there's no separate line for it the way there is with sales tax. Speaking of sales tax, that's actually the cleanest comparison here. When you buy a $100 jacket in a state with 7% sales tax, you see it. $7, printed right there, itemized, obvious. A tariff works completely differently. If that same jacket was imported and carries, say, a 15% tariff on the fabric or the finished garment, that cost gets folded into the sticker price before the jacket ever reaches the store shelf. You don't pay $15 separately. You just pay $115 for a jacket that used to cost $100, and you assume the brand raised prices, or inflation did it, or everything's just more expensive now. Nobody hands you a receipt that says tariff surcharge. That invisibility is the entire mechanism. Now here's where it gets interesting, because not every purchase carries the same hidden toll. Let's break down where that $1,300 is actually coming from, because averages hide a lot of texture. Start with appliances, because this category has some of the best documented numbers. Back when tariffs were placed on imported washing machines, researchers at the University of Chicago and the Federal Reserve tracked what happened to prices in the following year. The average washing machine went up by roughly $86. Not because steel got more expensive to mine, not because factories raised wages, purely because of the tariff itself. And here's the strange part. Dryers, which weren't even directly tariffed, went up by about $92 too, because manufacturers realized people buy washers and dryers together, and a matched price hike is easier to disguise inside a set. Now move to electronics, which is where this tax hides in plain sight the most. A laptop assembled with imported components, a smartphone with parts crossing 4 or 5 borders before final assembly, a television with a tariff display panel. These products can carry anywhere from $20 to $80 of embedded tariff cost per unit, depending on the category and the year. Multiply that across a household that replaces a phone every few years, buys a laptop for a kid starting community college, picks up a new television during a holiday sale, and you're looking at a couple $100s a year just from the electronics aisle, spread out so thin across so many purchases that nobody ever notices it as one expense. Then there's clothing, which is almost sneaky in how small each individual hit is. A single tariff t-shirt might only carry $2 or $3 of hidden cost. A pair of shoes might carry $8 to $12. On their own, forgettable. But the average American buys somewhere around 50 to 60 clothing items a year across a household. Shirts, pants, kids' clothes, shoes, jackets, and when you add up $2 or $3, 50 or 60 times over per person across a family, you can land on $200 to $300 a year without buying anything that felt expensive at the time. And then there's the big one. Vehicles. Tariffs on steel, aluminum, and imported auto parts have been estimated to add anywhere from several hundred to a few $1,000s to the price of a new car, depending on how much of that vehicle was assembled overseas versus domestically. Even a car built in an American factory often uses imported components, sensors, semiconductor chips, certain steel alloys, so the Made in America badge on the trunk doesn't mean tariff-free. If a family buys one new vehicle roughly every 6 or 7 years, and that vehicle carries an average of $1,500 to $2,000 in embedded tariff cost, you can spread that out to a couple $100s a year just from car ownership alone, even though it landed as one lump sum at the dealership. Add groceries into the mix, imported produce like certain fruits, coffee, and specific processed goods carrying smaller percentage tariffs, and you start to see how $1,300 stops looking like one big tax and starts looking like dozens of tiny ones, stacked so quietly across an entire year of ordinary spending that no single purchase ever feels like the tariff purchase. But here's the part that changes how you should think about this number entirely. $1,300 a year works out to about $3.56 a day, less than a cup of coffee. And that's exactly why it's so effective as a hidden cost. It's specifically engineered, whether intentionally or not, to sit below the threshold where any individual human notices and gets angry. Nobody boycotts a store over $3.56. Nobody calls their congressman about a washing machine costing $86 more. It's death by 1,000 tiny cuts, and each cut is small enough to be invisible on its own. Now let's talk about who actually writes the check, because this is where a lot of people get the mechanics backwards. The popular assumption is that tariffs are paid by foreign countries, that when a tariff gets placed on goods from overseas, the exporting country somehow foots the bill. That's not how the accounting works. A tariff is collected by domestic customs authorities from the domestic company importing the goods. The foreign manufacturer doesn't write a check to the United States government. The American importer does, the retailer, the wholesaler, the car company. And companies, as a general rule, do not enjoy absorbing costs. Economic research on past tariff periods has consistently found that somewhere between 70 and 95% of tariff costs get passed through to consumers in the form of higher prices, not absorbed into corporate profit margins. So functionally, despite the framing you might hear, the tax is domestic. It's paid by whoever's standing at the register. Here's a detail that rarely makes it into the conversation, and it matters. Retailers don't just pass along the tariff dollar for dollar. Many retailers apply their normal percentage markup on top of the new tariff-inflated wholesale cost. So if a wholesale product goes up by $10 because of a tariff, and the retailer marks up at a standard 50% margin, the consumer doesn't pay $10 more, they pay $15. The tariff gets multiplied by the retail markup structure that already existed before the tariff arrived. This is sometimes called tariff amplification, and it's a big part of why the actual household cost tends to run higher than the raw tariff rate would suggest on paper. Let's zoom out for a second, because there's a compounding angle worth sitting with. $1,300 in 1 year doesn't sound catastrophic, but run that same number across a decade of ordinary household spending, and you're looking at roughly $13,000, enough for a reliable used car, a year of community college tuition, or a meaningful head start on a retirement account, all quietly diverted into embedded costs across appliances, clothing, electronics, and groceries that nobody ever wrote down as the tariff line in a budget spreadsheet. That's the strange thing about invisible costs. They're not small because the total is small. They're small because they're divided into pieces too tiny to ever add up in your head in real time. Now, here's where this video has to be fair, because this number isn't evenly distributed, and pretending it hits everyone the same way would be dishonest. Lower-income households tend to spend a much higher percentage of their total income on physical goods, clothing, appliances, electronics, groceries, compared to higher-income households, who spend a larger share of their money on services, housing, and experiences that carry little or no tariff exposure at all. That means $1,300 can represent something close to 2% of annual income for a household earning around $65,000, while representing a rounding error for a household earning 3 or 4 times that amount. Tariffs function in that sense like a regressive tax, one that technically applies to everyone equally in dollar terms, but lands with dramatically different weight depending on where you sit on the income ladder. And there's a group this genuinely does not apply to in any meaningful way: households that buy almost entirely used goods, rent rather than furnish from scratch, drive older paid-off vehicles, and spend the bulk of their income on rent, utilities, and services rather than manufactured products. If your spending is mostly services, a gym membership, a phone bill, a lease payment, a subscription, you're largely walking around this particular tax altogether. This isn't a doom number that catches every single person the same way. It's concentrated specifically in the aisles where physical, manufactured, imported goods live. Now here's the part that changes everything if you've ever wondered why some categories jump in price faster than others. Tariffs don't apply evenly across countries or product categories, and companies have gotten remarkably good at what's called tariff engineering, restructuring products, reclassifying them under different customs codes, or shifting final assembly to a different country specifically to dodge a tariff bracket. A shoe with a slightly different sole material can be classified differently at customs and carry a completely different tariff rate than a nearly identical shoe one aisle over. A car assembled in Mexico instead of Michigan can carry different treatment depending on trade agreements in effect. This is why two nearly identical products sitting next to each other on a shelf can carry wildly different hidden costs, not because of quality, but because of where a factory decided to stamp the box. Let's follow the money one more layer, because there's a timing element that catches people off guard. Tariffs don't hit prices instantly. There's usually a lag of several months to a year between when a tariff is announced and when it fully works its way through supply chains into retail prices, because companies are often selling through existing inventory that was purchased before the tariff took effect. This is exactly why price increases can feel like they come out of nowhere 8 or 10 months after a policy change makes headlines. By the time the average shopper notices the price of a coffee maker went up, the news cycle that explained why has usually already moved on to something else entirely. So let's bring this back to one clear number, because that's really the whole point of this video. $1,300 a year, spread across appliances, cars, clothing, electronics, and groceries, arriving in increments so small, $3 here, $12 there, $86 on a washing machine you buy once every decade, that almost nobody ever adds it up into a single figure in their own head. It's not a tax you pay, it's a tax you absorb, one price tag at a time, disguised as inflation or the cost of everything going up, or simply, that's just what things cost now. The arithmetic doesn't change based on how it's labeled. Money left your account either way. This isn't a video meant to scare you or tell you to panic about your next grocery run. $3.56 a day isn't going to break a budget on its own. But understanding where that number actually comes from means the next time a washing machine, a laptop, or a car feels mysteriously more expensive than it should be, you'll know exactly which invisible line item is quietly doing the work. If breakdowns like this are the kind of thing that makes your brain feel a little sharper about your own money, go ahead and subscribe. There's another one of these already being put together. And tap that like button, because it's genuinely the reason videos like this end up in front of someone before they get blindsided by a price tag they can't explain.